Thank you everyone for joining. My name is Jamie Summer. I'm a managing director at JPMorgan in our technology investment banking team. I have the privilege of moderating today's investor panel, where we're going to focus on what's next in AI innovation. Aneet, Damien, I think you've introduced yourself, so maybe Hala, just quickly introduce yourself, and then we'll go from there.
Sure. I don't know if this is working or yeah.
Yeah.
Okay. So I'm Hala Fadel. I lead growth equity at Eurazeo. Eurazeo is a European leader in growth equity, investing mainly in software and artificial intelligence, but also a bit of deep tech. That's it.
Perfect. So just before we get into it, I was just going to say, like, I think I'd echo everything that's been said. This is a very opportune time to be having this discussion, particularly from our perspective. On the one hand, you clearly have the sheer volume of AI funding continues unabated. Anthropic news last week, but if you just look back over the last year, AI accounted for every 1 in 5 startups and every $1 in $2 invested over the course of last year. And then, as you say, on the flip side, the spectrum of what AI can do is punishing for software businesses, but that's also rolled out across finances, etc. You mentioned 300 billion. I think if you looked over a 10-day period, it's more like $1 trillion across market caps. So all of the questions we're getting back from the investors, corporates, are very focused around where this may go. And maybe with that backdrop, Aneet, we'll start with you just because you're sat here, unfortunately, to my left. Platform shift, what's next, do you think, in terms of models, data, infrastructure? Where do we think we go from there?
I think the biggest transition that's coming, if you go beyond agentic, is going to be in what I would call physical AI. We're going to move from the digital world and having digital agents, where agents will get embodied into the physical world. And this is really important because some of the use cases that Xavier talked about, drug discovery, automotives, there are problems that cannot be solved in the digital world. You actually have to be in the physical world. And you've all read the news or seen things like Jan LeCun just started his company. It's a physical AI. Jeff Bezos came out of retirement, started Project Prometheus. And these are companies that basically became unicorns in like 6 months. So I think that's the next big wave. And I think I'll just add to what Xavier said. I think what we're seeing is there's a plateauing of innovation in LLMs. It has the mind share and the hype, but the innovation is rapidly slowing down. So I think that's going to be the next big wave.
Anything to add?
Yeah, so of course I agree on the physical AI part, but I think we're not done in terms of software, where today we're seeing AI augmenting us and augmenting functions across the enterprise. The next big step is when it actually becomes operational and replaces what we're doing, except, apart from just augmenting us and doing things better. And for that, you have, I think, lots of companies that are in the audience here trying to tackle this, automating processes. And here there will be an interesting head-to-head, I guess, between existing players that have already access to the data, that have the distribution, and that will be that they have also the customer relationship, and that will be adding value, hopefully, into that layer. And the new players, the smaller companies that are going super fast and that are trying to automate these processes and make them seamless within the enterprise. So this is kind of the next head-to-head that we're going to be watching.
Yeah, agreed.
Maybe adding to that and echoing what Xavier said, I think, the shift is going to be that we can no longer really have bigger LLMs to innovate. It's that the performance have plateaued. So the big shift is going to remember what you have, a native AI agent deployed on the infrastructure-aware systems. And I think the big shift as well is going to be from a prompt-centric set of tools to autonomous workflows that are aware of enterprise context. And that's the key for the audience today as well, which is essentially permission, identity, data sensitivity, compliance, all that. So that's the big shift. Really, we come from a lab mode and kind of a performance benchmark to really something that is deployable at scale in the enterprise. And that's for me the big thing I'm trying to follow. And that's to bridge the gap with traditional software, trying to make a journey as well.
And Damien, on that then, I guess within traditional software, where do you think some of the more defensible pockets will remain over time? Or what are the differentiation factors? People have talked about customers, but what else can people be doing who are coming from that angle?
So I think I have, an example, a counterexample. So I think, core complex ERP solution will be still defensive to some extent because they're so embedded in the presence of the enterprise. So there is some defensibility there, I think, some extent, because by the point about the enterprise context awareness, which is really the hardest hill to climb for some of these new startups. So I would say core complex ERP solution would be more defensible. And I know you probably thought last week, for me it was interesting data point. You've seen a darling in the last 40 years in software tech, which is Dassault System, losing in one day 20+%, 50% year on year. This is a company that IPO'd in '86 that have been doubling their addressable market through acquisition every 5 years, and with the darling industry. So on the one hand, humbling, Dassault System market cap is around $20 billion or so, or euros, right? And then on the other hand, you have Mistral AI, who is now approaching 13 to 14 billion, private, not realized, but still as valuation, and announcing 1.2 billion in capex. So that's very interesting. So is it game over for Dassault System? No. Do they need to reinvent themselves? Yes. So I think the big dichotomy is now traditional software, and we have this. I think Isabel mentioned the famous, fund that says, software is eating the world. I think AI is eating software pretty much, but I think not really. I think AI is still there. They have access. They're larger companies, traditional SaaS software. It's a question about reinventing themselves, and is either buying, partnering, or building, as Isabel said as well. So Dassault has to reinvent it quite quickly, but they have a chance to do that. Might Mistral help them do so? Yes, surely.
Yeah, I think the one thing I would add to that is when you think about software, if you're basically have very high switching costs, which is most of the ERP systems, and your customer is okay with the monolithic architecture, which is everything's coming from one vendor, it'll work. But there'll be certain use cases and applications where you're going to have headless architectures. And in headless architecture, you're going to have AI applications sitting on top of these monolithic systems, delivering more value. And the thing that's kind of interesting in AI is the infrastructure cost is so high that every CFO is asking, what is the ROI? No one's blindly writing a check and saying, oh, Salesforce, that. And what has happened in software and SaaS, this is really, really important to understand. They have dug their own grave. Because every year they introduce 3 new features and the price per seat went up. And every CFO is sick and tired of this feature creep and the price bloat. So now people are asking for innovation pricing. What about outcome-based pricing? What about consumption-led pricing? I don't want seat-based pricing. So any application where you can have a headless architecture, the monolithic guys are going to get hammered because the software stack getting unbundled. So I think that's going to be a big one.
Maybe just to add to this, yes, mission critical systems of record and ERPs that are well integrated are difficult to remove from the enterprise, but at the same time, everybody knows they're so horrible to implement. And the ROI on these software is also horrible. So you can basically almost scrap today any new customer on that segment. Plus, they're going to have to spend so much on potentially making acquisitions because they're just unable to attract talent to have their next AI product. So I guess markets are also discounting this, like future growth is going to be very difficult, and future growth will come through acquisitions. So it is what is currently being priced.
Yeah. And with that in mind, maybe I'll just continue. How are you guys in your own internal committees looking at AI risk at the moment? How are you thinking about software investments versus AI investments, risk on, risk off? What's the kind of thought process at the moment? Quick moving debate.
Yeah, so I would say there are maybe 2 types of companies that have AI at the core of their product. So the Mistral of this world and the Dust of this world, or the Ami Labs of this world, or 11 Labs. And the ones that are AI enabled and trying to create value by integrating themselves into a company and offering a service. The craze in terms of valuation is more on the first bucket. The second bucket is, I would say, a bit easier to assess because you go back to basics in terms of stickiness of customers, repeatability of their sales, how integrated they are within an existing customer, what's the value they bring. So that's easier to assess. So we go back to basics. Maybe there's a slight premium there, but you could be quite comfortable if you start seeing this. There's also integration with some kind of hardware component. And then on the first bucket, it's really FOMO that is really driving the market today. If you have a fund that's big enough to afford this type of risk, then that's great.
Yeah.
But then any kind of underwriting is speculative at this stage.
Yeah, I would add that, we are primarily early stage investors. So we try and stay away from narrative-driven valuation multiples. And we look for unit economics. Does it make sense? I'll give you an example that's mind-boggling. OpenAI lost $40 billion last year. Tesla, Amazon, and Uber combined over a 10-year period lost $6 billion. So you have to ask yourself, how long will people pour money in at economics that makes no sense? And as you said, the FOMO is kind of coming out. So if you can write a $5 billion check and you don't care, that's fine. As a small fund, we have to basically get in at X, and we have to, if you want to give 4 or 5X returns, we can't get in at $100 billion on a Series B and hope that there's going to be $1 trillion IPOs. You can count on the fingers of your hand how many $1 trillion IPOs they're going to be.
And maybe we bridge the gap at Forgepoint between BGV and Eurazeo, because that's a multi-stage VC from early to growth. And I would say we're not FOMO investor, we are quite disciplined, but I think, at RIC, and we focus more on the first bucket to the product-led strategy. And I think for us, it's really around, aligning to the end market. So first of all, it's the ROI, potential ROI of whatever they bring to the market. Then the defensibility of data, so what criteria we look at, and the data mode and defensibility all together, basically. So I think also we don't, and we try also, we really believe that we're not going to invest in inflation model or horizontal play. We're going to have more specialized, so we really favor the section of cybersecurity and AI, because it's for us, and infrastructure software. So essentially, I think we're going to enhance or optimize the way, we talked about insurance costs, you have hardware and software solution to do that, to reduce that. We're going to try to apply, AI to specific problem. It can be bank fraud detection, AI automation and so on. So that's really our edge, is really around, not having FOMO on the large horizontal play or foundation model, but really about anything, the need of the markets, and essentially, having measured what's the potential for these verticalized or specialized solutions, essentially. And that's, keep us
I would add to what Damon said. If you look at vertical applications, for the first time in the last 3 years, the amount of dollars that are going to vertical applications for AI has surpassed horizontal. And I think that's where the issue of smaller models, domain-specific data sets, that's all where it plays out.
Just maybe to build on that and on the moat of existing software players. So Damien gave the example of Dassault Systèmes, that is very much a closed infrastructure with their data being held in a closed system. I think they're going to face not just Dassault Systèmes, but everyone in that space, a lot of pressure on opening up their data because companies will feel that this is their own data as opposed to Dassault's data, and probably this will release some of the existing moat of those companies when the data is actually shared to the open, and new players can use this to leverage new solutions.
Yeah, that makes sense. And actually, even within the market last week, we saw a lot of the traditional Moody's, S&P, RELX, and then we've got LexisNexis here, which traditionally that data was the moat. That's been a pretty extreme change as people think about the erosion of that data. I agree with that. And for you guys personally, how much are you using IC internally in your own IC processes, helping you find the next exciting investment, connect with people?
Sure, I think it's funny because we're about a year ago in a panel, and I just speak about that as well. So really embrace, to Xavier said that, in the US expression, we eat our own dog food. That's the expression in the US. So essentially, we have leveraging one of our portfolio company, actually, we have developed our own sort of database. So first, we're tracking something like 20,000 companies in our space, globally. And again, it's AI-enabled, human in the loop. So basically, we'll probably use AI with a mixture of proprietary data, scrapping features we have access to, both private and public and paying for, to essentially triage, and cut through the noise, because we are the largest team specialized in cyber AI, but still a small team. So we have really to filter out, and we have a kill list of companies we invest in, and then the long tail. So it's really around, discipline, faster time to decision, and filtering out the noise quickly. So we can use that for this, or early discovery up to a sort of one-page review on the company and so on. But then the real value add comes, that's still human, preserving our jobs, human-led, which is around the access, and for the one who identified a priority, how to win the deal, basically. So it's really around triage and filtering out at this stage, and mapping out the market, but not for the actual fun stuff, which is winning the deals.
I think for us, what we've done is we've actually invested in a proprietary tool for deal flow sourcing. So usually we see about 600 deals a year through our own networks. We've kind of built a tool that allows you to basically get about 200 more deals into the deal flow. And what's really interesting is, as we built it, what we figured out was the tool was really helpful. It does a real-time ontological mapping. So if you put in and say, you're looking at these two startups, it'll do a mapping, and you can ask which other companies have been funded in the space. And it's really important, because you cannot drive looking in the rearview mirror in early stage VC. So we get early stage, you have to basically see as many companies as possible in that space. Because if you miss 3, they might be the ones that win. Mm-hmm. So it's helping us kind of see more companies a lot faster, not like, calling, so who did you see? Let me Google, And so it's fantastic. So our time to basically seeing as many companies in the same space possible has gone up. The second thing which we're doing, which sounds pretty mundane, but as the portfolio size grows, we have these meetings with the full partnership to go through the, who's doing well, who's doing bad, how do we benchmark data set, what's the net retention ratio, all those good things. We're using basically an AI-based visualization tool to make those meetings go a lot faster. So data goes out to the partners earlier. They see what it looks like, and they can make decisions.
And Dad?
Yeah, so we have here actually a person, Romain, who leads our efforts internally in the growth team to use all these tools. I think also the most important part is, I'm not going to add to, everybody has their own, sourcing, accelerating the deep dives on every sector, on every company. But I think the most important part is to be able to use all the tools that are available. In the previous presentation, we had, suggestions that are very much centric around one model, but we try every model, because every model is good at something. Every new tool is good at something specific. And it's by having this combination of all these tools used, each one being good at something, that actually you deliver a lot of value. So I would just not stick to one solution, but we use it, across the board, from sourcing to IC memos, deep search onto a specific sector, accelerating DD, because on the right to win, of course, there's all the network that you have, all the value that you create within. And I guess this is your next question about each one's secret sauce about how to win deals, but also gaining time is, very important to win a deal. If you're able to forge an opinion in 2 days versus 2 weeks, that's also worth something.
I would add something to this conversation. I think it's taken a while to kind of really understand this. But one thing that AI does, and LLMs have done, is it gives you very fluent, believable answers. And a lot of times we confuse fluency with it being the right answer. And it's absolutely wrong. So the one lesson we have learned is we treat AI not as an oracle, but as a junior analyst who can summarize stuff quickly, but still needs human in the loop. So we can't just say substitution. Oh, well, we don't think anymore. What's the model telling us? Important.
100%, yeah, great. Very eloquent way of putting it.
All using that pretty similarly. Maybe just to jump over a question, actually, but build on something you were talking about earlier, Hala. How do you think the revenue models in this space evolve over time, but both in AI and then the impact of that on traditional software. And the second one's obviously a big question mark. There's quite a few different views and moving pieces on that.
Yeah, I mean, it's going to be interesting to see how it evolves. Is it per usage or is it something flat? I mean, we're just looking at a company now that is actually its revenue model is on usage. You'll have also probably something related to value creation, maybe revenue share if you're thinking of e-commerce agents and problem solved, number of problems solved, and the value or cost saving you get from that. It's going to be interesting to watch. We're seeing a lot of evolution in this.
I agree. I think Anik said it a bit of preview before. Because I think the traditional proceed, kind of upsell, feature heavy model is kind of no longer working. So I think eventually, especially for the AI native, category of companies, product-led companies, it will be more, about output links, so maybe cost saving or revenue generation and so on. So I think increasingly we'll see a model evolving, and actually it's smarter for the company as well, rather than just selling to seat. It will be directly aligning interest to either a measurable ROI of cost saving or revenue acceleration. I think that's much more powerful, slightly harder to implement, to measure, and maybe a bit of risk taking. But I think that will be for the product-led, companies in the space a better outcome than the per seat model.
I think there's also one thing to add. What's interesting, at least from an early stage perspective, the traditional wisdom used to be you basically build a product, you try and get product market fit, and you figure out pricing later on down the road. I think that's out the door. You have to think about pricing a lot earlier, because you can't just do pricing and then go back and change it. And I think what's interesting about that is, for us, when we look at early stage companies, we are now starting to really emphasize kind of the product management DNA in the founding team, because if it's not there, they will not take on the pricing issue on day one. And it's just going to be very hard trying to fix it after the fact.
And in things like automation, if you're replacing humans and you're looking at ROI, I mean, for pricing, this is also a good starter. I mean, as a base to see how many humans you're replacing, and therefore, how you're going to price this solution.
Yeah. I think we've got 5 minutes or so left. That right, David? So very quickly, I think let's just say last one. Sort of in terms of most underfunded or underlooked opportunity, where would you be focusing?
Underfunded?
Yes. Could be the same as underlooked. They might not be the same thing, I guess.
Yeah. So I would say most overfunded is basically bigger, better models. I'd say LLM, the foundation models, are way overfunded. I would say underfunded, where we tend to look, is basically not there yet, but I think really systems of actions. Very fundamentally, there's an autonomous component to what the software is doing, and especially in vertical applications.
Yeah, underfunded. I think you're seeing a lot of robotics. I mean, talking about physical AI, that is kind of the new place to be. So lots of opportunities there. I would say cyber also, because these are the types of needs that will become even more important with AI. And not that there isn't hype around cyber as well, but I guess it's a segment where the need is huge and there isn't quite the right solution yet.
The music to my ears. I think I agree to the overfunded, which is the foundation model. And I think, echoing what Hannah said, for us, our sweet spot is basically the intersection of AI and cyber. So it's both ways. So it's AI applied to cyber. And the underfunded area, for me, that's starting to be adequately funded, not over, but it's growing. And you have to fight AI with AI, essentially, because the early adopter of AI has the attack side oftentimes. So basically, innovate as fast on the defense side. So AI for cyber is one which is evolving and booming. The one I think is still reasonably underfunded and growing, equally important, is the security for AI. Because essentially, that's a big attack vector, essentially. And I give you an example, which is part of your firm, Jamie. So JPMorgan about a year and a half ago launched an internal LLM for asset managers and private bankers to assess the clients. So internal facing, but still, we happen to have a big advisory council where we have the CISO of JPMorgan, and we got an inbound call from him, basically doing well, saying, "Hey, Forgepoint, you have a solution to pen test and all this model because I can't sleep because I just launched that big, open door potentially." So, and then they read something to adequately, pen test that. So I think security for AI will be one area which is actually absolutely critical, because as it become more prevalent, users become more prevalent in enterprise, linked to the point about open source. So if you look at, Hugging Face, which are the GitHub for LLMs, you have probably about 70% of the model there who have some kind of vulnerability. And you have some enterprise blindly using these basically for cost saving wise, implementing those. So security for AI for me is one of the big unfunded areas.
Just maybe a less obvious one that we talk about, maybe not as much, is healthcare.
Yeah.
I know there are some healthcare also companies in the audience, and one completely out of fashion is climate.
Conscious of time, right? Very quickly, sort of what one-line answers each. What would be your boldest prediction for 2026, AI or other? Anything you like. Start at the end, Damien.
I would say I wouldn't, I always believed in phoenixes. So don't write off some of the traditional software companies that eventually will get there, and then name one, eventually getting back together about, reinventing themselves properly and actually getting stronger after turbulences, generated by AI essentially. So bid for acquisition or internal development. So I wouldn't write off some of the traditional software. It's been hammered in the last couple of weeks. So watch and look for a comeback in strength for those guys.
I would say this is, I don't know, you can caveat as a bold prediction or not, but I think the narrative in the industry will shift from bigger is better, one size LLM to fit everything, towards hybrid models between tiny models, small models, large models. I think the second thing I think is going to be interesting is going to be, I truly believe there'll be some type of a correction in the AI market. It's just not possible.
You have the final word, Hella.
Wow. Yeah, no, I think we're going to finally see some real productivity gains and real adoption by enterprise, where it was from POC to actual adoption. And then maybe on the negative side, I'd be very surprised if we don't have one of those large, very visible companies that doesn't disappear or, I don't know which one, not necessarily. It's just that, it's like with every cycle during the internet times, we've had the Netscape of this world that appeared and disappeared.
Yes.
And so we'll have another Netscape.
A different Netscape moment.
A different Netscape moment.
Perfect. Very good. Thank you, all three of you, for your time.